Good afternoon and Assalamu alaikum. Um, so we have discussed cash flow forecast in the last class. Today actually I'm not well, so my voice or I may sound bleak. Huh? So if you have any question or you do not uh, get anything, please let me know. Okay, all right. Now let me show you the cash flow forecast with some numbers, right? And then we'll move forward. See this. This is a cash flow forecast, and you can see, let's say, I think you are not able to see it. Okay, just a minute. Now you are able to see it, right? This is a cash flow forecast, right? If you see, there are different months given, and I told you cash flow forecast is always drawn on month by month basis so that you can see in which month you will be facing cash flow problem so that you can take steps beforehand before it comes. So cash at the start of the month 25. The cash at the start of the month, I told you this is opening cash balance, right? So previous month, obviously, there was some cash left. That is what we call closing cash balance. Cash which is left at the end of the month, we call it closing cash balance. So that becomes the opening cash balance of the next month. So January, the opening cash balance is 25. So definitely it means that in December, the closing cash balance was 25. Okay, then there are different cash inflows there. Okay, then there are different cash outflows there. They actually added them together, and then actually found out net cash flow. And net cash flow, you understand, net cash flow is cash inflow minus cash outflow. So when you will go for calculating net cash flow, so that will come as 20 minus 25. So it will be minus 5, right? And because it is in negative, right? So what you will do, now you cannot add it in the opening cash balance. Remember, I told you earlier, because it is in negative, and generally we use brackets for it. Huh? Do remember that as well. So we will subtract it from the opening cash balance. अगर ये positive होता net cash flow, then we would be adding it in the opening cash balance. So 25 minus 5, it will be 20. That is the formula to calculate closing cash balance. Closing cash balance is net cash flow प्लस ओपनिंग कैश बैलेंस. वो माइनस भी हो सकता है, आपको मैंने बता दिया, डिपेंडिंग ऑन कि नेट कैश फ्लो की फिगर क्या आ रही है, या समटाइम्स क्लोजिंग कैश बैलेंस जो ओपनिंग कैश बैलेंस है वो भी नेगेटिव हो सकता है. ओके, एंड देन नाउ सी कैश एट द एंड of the month is 20, right? So now if you see February, so the cash at the start of the month is same 20. See, because opening cash balance of the next month obviously will be the closing cash balance of the previous month. So same sort of a thing you will do it, right? But remember, is there any cash flow problem there in that business? Can anybody tell me, is there cash flow problem being faced by the business in any of the months? Who can explain me that? Anyone? Abdullah Pirzada, can you explain me that? Abdullah, are you there? I think Abdullah, yeah, please, yes, go ahead. Hamza Farouk, you want to say something?
Yes, sir. There's no problem in each of the months because the closing balance is positive in all of them.
Very good, excellent answer. Because closing cash balance, that is the cash at the end of the month, is positive throughout these months. Yes, there are some instances where net cash flow is negative in the month of January, February, and March, but still, it actually did not lead to negative closing cash balance. So there is no cash flow problem there. So it means now the cash can be used somewhere else in the coming month because you know that cash flow problem is not going to occur. So you can use it for some other purpose of the business. Like let's say you want to buy more of the raw material, you want to hire more workers and pay them wages, right? Okay. Similarly, if I talk about this one as well, now this is rather more complex, right? But I'll just tell you again the basic principle. The cash inflows. Okay, again the January, February, March, April, May, June. Forget about the total, right? Because no, in the exam they do not ask you about the total. Cash inflows. One is investment. Now you know that investment is not an income. I told you earlier. In cash flow, we do not consider either it is a revenue, expense, or profit. We just consider whether cash is coming in or going out. If it is coming in, we consider it as cash inflow. If it is going out, we consider it cash outflow. So now there is one mistake there, right? And that is they have written credit sales. Um, do you know what is the problem? Abdullah P. Zada is saying, sir, mic not working. Okay, all right. Faria, can you tell me, is it right to write credit sales here?
No, sir,
Faria?
because in cash inflow, only cash sales can be included.
Very good. So the right word should have been cash sales. So this is wrong. Okay, remember this is cash sales. This is not credit sales. Okay. So we add them together to get total cash inflows, that is 12,500. Then there are cash outflows, project materials, subcontract labor, marketing, legal and accounting, equipment, Sophie and Jack salaries, and other costs, whatever, because now the cash is going out. These are your these are your cash outflows. Okay, so you add them together, you get 9750 as your cash outflow, right? And now you to get net cash flow, what do you do? Cash inflow minus cash outflow. So this is 12,500 minus 9750. You will get 2750. Now, if you see opening balance is zero. And opening balance is zero, quite possible that they may have started their business. But it is opening balance that is zero. And the reason is one of the reasons that there is no previous month. If there is no previous month, obviously cash balance, opening cash balance will be zero. Now, closing cash balance will be the same because 2750 plus 0 will be 2750. And now you can see that the closing balance of January becomes the opening balance of February, and this is how it goes. The rest of the values in other months will be calculated in the same way. I hope there is no confusion and we can move forward. If there is any confusion, do let me know. So there is none. All right. We discussed that last time. All right. Cash flow problem, you know that. What is it? When cash inflow is greater than, when cash outflow is greater than cash inflow, right? It occurs when total cash in outflow is greater than total cash inflow. What are the causes? Basically, there are two causes. One, there is more cash outflow going on in the business, right? Or there is less cash inflow in the business. That is the only reason ना. Outflow बढ़ रहा है, inflow आपका कम है, तो कैश फ्लो प्रॉब्लम फिर आ सकती है आपकी. उसके रीजन बहुत से हो सकते हैं, हम देख लेते हैं. Hamza Farooq is struggling with the net. Okay. Now we see causes lack of planning. You know that you have to forecast. I told you earlier, planning is all about the future. So if you do not forecast how much cash will go out and will come in, so it is highly likely that you might face cash flow problem because you have no idea how much cash will go out and how much cash will come in the coming months. So ये मुमकिन है कि आपका outflow ज़्यादा हो जाए. Then poor credit control. Yes, now here credit means that you are not managing finance well. Either you are spending too much. Okay, if you are spending too much, obviously it is likely to to more cash outflow, right? Allowing customers too long to pay tax. Yes, for example, you have given 2 months credit to customers now, or in order to attract them, or in order to make them your loyal customers, you give them extended credit like 3 months, 4 months, even 6 months. Now, so you might be able to attract customers, but the problem is now for the next 6 months, no cash inflow will be there in the business. That is the problem. Okay. So then what is the point of attracting customers and convincing them to buy your product if you are not able to manage your business operations because of lack of cash availability? So do not give extended time period to your customers. Right? The next is expanding too rapidly. Yes, that is also possible. For example, you have a shop, right? And in that shop, you can entertain 500 customers. And obviously, when you will entertain 500 customers, you will get cash inflow from the sales, okay? Sooner or later, right? Now, let's say right now you are able to entertain 200 customers instead of 500 because right now you are not working at full capacity, like you are not entertaining 500 customers. Now, if you open another shop, another outlet in some other area, now you know that cash outflow will further increase because you know that to set up an outlet at the start, lot of cash outflow occurs. Either you hire workers, either you buy products and put it in your shelves, right? So it means you are not having enough cash flow from your first outlet and you actually started the next shop. That is wrong because a better way is and keep on entertaining customers in your first shop till you reach the figure 500. Now you are working at full capacity in that outlet and you're getting enough cash inflow from the customers. Now you can go for opening up of another outlet because this is a wise decision. But if you spend too quickly, as I just explained, obviously it may lead to more cash flow problem actually because more cash outflow will be there as you are expanding, opening the second, third, or fourth branch. But right now you are not getting the maximum cash inflow, or you are not getting the maximum sales from your outlet. So then we have unexpected events. Yes, sometimes it happens. Like for example, your building gets damaged, earthquake comes, okay, or your building is was on fire, and then you actually spent too much in repairing that building, or you might have to go for another building. Okay, either you will construct it or you will hire it. So it may require a lot of cash outflow. So this is also possible because right now you are not making sales because your building is damaged. So, but still you have to spend more money. See, right? That is out. So more cash outflow will be there compared to cash inflow, leading to cash flow problem. Okay, then So these are the solutions, right? And these are the causes, sorry. Now let's come to how to solve cash flow problem. I told you earlier there are two ways. Because cash flow problem actually occurs because of either less cash inflow or more cash outflow. So if you are able to manage it, like you are able to increase your cash inflow and you are able to reduce your cash outflow, you will be successful in solving cash flow problem. But remember, you have to do it beforehand, because once cash flow problem is faced by the business, then it's very difficult for the business to get out of it, because business has to face loss. Production will stop, and obviously it will give damage to the business. Customers will be ignored. They might be asked to come at some future date to get their goods. So you have to solve it before it comes. Now let's see. Increasing cash inflows, right? This is one I told you, and there are many ways to increase cash inflow. And actually, we did study the chapter business finance, right? So business finance means what are the different sources of raising finance? Huh? So actually, that would be cash inflow. Huh? One is overdraft, because overdraft is quickly available from the banks, and you know what is overdraft, right? So you can arrange it and you can solve the cash flow problem, because it will increase cash inflow. Sale of assets. If there are some assets which are lying idle and they are not in use, and you think that you won't be using it in the near future, so better to sell it, get cash from it, and solve your cash flow problem, because it will give you more cash inflow. Similarly, sale and lease back. Okay, you can sell your uh, those assets as well which you are using currently. Now it's very strange to say that. Huh? Idle assets we understand that you can sell it because they are not in use and get cash immediately. But those assets which are in use, like equipment, machinery, or whatever, or building, if they are in use, still you can sell them and get cash. Now there is a question that, sir, how then they will be able to manage their operations? How they will continue their business activity? So the answer is, what they can do, they can sell their asset which is in use and they can get it on lease. Lease, you understand, and we call it sale and lease back. So what will happen when you will sell it? You will get cash, a huge amount, right? And then you will get it on lease, right? And now you have to pay installments, okay, which is relatively a small amount, which you will pay on monthly basis. But the focus is to get more cash inflow. So now your cash inflow is more at that particular time or in the coming months, and you will be actually going for very less cash outflow that will be in the form of installments you will be making to the leasing company, right? So this can also be used as a way to increase cash inflow. Then allow cash discount to customers. Yes, if you have given credit to customers, let's say for 3 months, you can offer them cash discount. Now, what is a cash discount? You tell them, okay, if you pay early, like let's say if you pay within month, I will offer you, or we will offer you 5% discount. Now, in order, this is actually a sort of an attraction for the customers, because now they have to pay less. So they get attracted by that offer and they pay it immediately. Rather than paying after 3 months, they pay it after 1 month or within 1 month. So this will definitely increase your cash inflow, okay, in that same month where you feel that cash flow problem is coming. Then the other way is you can reduce cash outflow. You understand this as well. Delay payment to suppliers, yes, because here you will reduce cash outflow. No? You are buying raw material or products from your supplier, right? But you do not pay to your supplier, and you ask for an extended time period. 3 months, 4 months, right? So that you can avoid cash outflow. Yes, you have to pay after 3 months, but right now you are going to face cash flow problem in the coming month. So the focus would be to solve that cash flow problem, which is right there approaching. So this is again another way to do it. Reduce unnecessary expenditure. Yes, do not go for unnecessary expenditure. Like let's say you have 50 workers and you use only half of the workers. Rest of the workers they are not used by you very often. So better to make them part-time, na? Part-time workers that whenever they are required, you can call them. When they are not required, they stay at their home or they perform their job somewhere else, and you do not need to pay them, right? So in that way, you can do it. Similarly, you have a building and you actually use 75% portion of the building. Rest of the 25% is never used. So it is better to arrange another building which has less capacity. Why? Because now you have to pay lower rent of the building because that is an unnecessary expenditure ना 25% बिल्डिंग इस्तेमाल नहीं हो रही तो इतनी बड़ी बिल्डिंग ली क्यों है and why you are paying a higher rent? Okay, if you pay higher rent, it leads to higher cash outflow. So this is how you can reduce unnecessary expenditures, right? So we are done with now cash flow forecast as well, cash flow forecasting, right? Now we'll move on to the next chapter. This one, chapter number 28, and that is okay. And remember, this is right now 12:30, so because right now I am ill, so as soon as session expires, you can leave. So you don't need to join again because I cannot actually teach you for long. All right, so don't make an effort to rejoin. All right, we'll continue that in the next class. No? Okay, now chapter 28, costs, break-even, and costing methods. Okay, let's start this. Before we start this, I need to discuss few things with you. Do you know what are costs? Amna Abbas, can you tell me what are costs?
Sir, fixed cost or variable cost?
Yeah, that's right. But how do you define cost?
Cost जो हमें पे करनी होती expenses के लिए.
Right, very good. So the money which is required, the money which is spent to support all business activities or to support business as a whole, these all are our costs. That's right. And it does include fixed cost and variable cost. Okay, when we talk about, so we have 10 minutes, right? When we talk about break even, now what is a break even? Again, I think business students, they know about it. So, Bilal Ashad, can you tell me what is a break even? Bilal, no idea? Anyone else? Okay, let me ask. I'm just thinking. There is no one. Razeen is there? I guess Razeen did join, but I'm not able to see her. Okay, let me then explain it. Faria, you can explain, na?
Sir, what is the question?
Question is, what is break even?
Sir, it is a point achieved by the business when profit and loss both are
Both profit and loss कैसे equal हो सकते हैं?
नहीं sir, total revenue and total cost is equal.
Yeah, that's right. Very good. Thank you. Break even is a situation where total revenue of the business and the total cost of the business, they are the same. Now, what does it mean? It means that when business revenue means the money which is obtained by the business when they sell products, right? And cost is the money which is spent to support the business, right? Now, if they are equal, this is what we call break even. Now, let me explain you that why it is important to study. When you start your business, you have to spend a lot. You have to buy a building or hire a building. You hire workers, you buy raw material, you buy equipment, machinery, and other necessary items. Even clothing for employees, um, protection, protective equipment for employees as well, if the work is dangerous, right? So, if this is the case, so all businesses they start with costs. They start with spending money. So our outflow is there, right? You know that. Then with the passage of time, they start producing it and then they start selling it. And that is the time when they start getting the revenue, right? Let's say right now your total cost is 10 lakh. You sell your products and you get 2 lakh back. Okay. Still revenue is 2 lakh and your cost is 10 lakh. Then you sell some other products and your revenue keeps on increasing, right? And then finally, you reach to the level where cost is equal to total revenue is equal to total cost. It means that the money you are spending is equal to the money you are getting in the form of revenue. That is what we call break even. And why it is important? Because the first target of every business is to achieve break even. Because after break even, what happens? Your revenue exceeds your cost because you keep on selling, na? So your revenue exceeds your cost. So then you start getting profit. So soon after break even, profit starts. And before the break even point, there is loss. We will discuss that through a diagram as well, right? Okay, just a minute. Okay, all right, students. I think we need to finish it right now, and we'll continue that in the next class. Okay. Thank you very much because I'm not well.